Hi, thank you for watching Digging to China. I'm Dong Shang. If you have not done so already, please subscribe to my channel. Thank you very much. China's property market is in the midst of a historic downturn. New home prices had fallen for 16 straight months through December. Sales by the country's top 100 developers last year were only 60% of 2021 levels. Earlier in February, the International Monetary Fund said that China's real estate crisis remains unresolved and that the country's growth remains under pressure. On top of that, according to Bloomberg calculations, more than half of 60 mainland China-listed developers are likely to post losses for the fiscal year 2022. The property market in China is so depressed that some banks are resorting to drastic measures, including allowing people to pay off mortgages until they are 95 years old. Based on a number of state media reports, some banks in the cities of Nanning, Hangzhou, Ningbo, and Beijing have extended the upper age limit on mortgages to between 80 and 95. That means people aged 70 can now take out the loans with maturities of between 10 and 25 years. But there are also prerequisites. The mortgage needs to be guaranteed by the borrower's children, and their combined monthly income must be at least twice the monthly mortgage payment. The new mortgage terms are like a relay loan. If the elderly borrower can't repay, his or her children must carry on with the mortgage. This has sparked an online debate. Chinese society is aging rapidly. Will such extended mortgage lessen the burden for home buyers? The timing is quite sensitive because there is recent speculation that China may be raising its retirement age. In comparison, there is no upper age limit in the US for mortgage applicants. It is prohibited under the Equal Credit Opportunity Act. However, lenders may look at age-related factors such as changes in income as borrowers near retirement. Analysts say the new age limit aims to breathe life into China's moribund property market while taking into consideration China's rapidly aging population. Basically, it's a policy tool to stimulate housing demand as it can alleviate the debt payment burden and encourage home buying. The main beneficiary of the move might not be the elderly, but middle-aged borrowers between 40 and 59. Under the extended payment cutoff age, those people could get a mortgage for 30 years, the maximum length allowed in China. Compared with previous terms, it means those borrowers could pay less each month. Chinese households have grown reluctant to purchase new homes in the past year, as the new defunct COVID curbs, falling home prices, and rising unemployment have discouraged would-be buyers. Last summer, protests that erupted in dozens of cities were staged by people refusing to pay mortgages on unfinished homes, dealing a further blow to market sentiment. Hong Hao is the chief economist at Grow Investment Group. He said, "This was a drastic measure and could be a marketing gimmick to attract the elderly to pay mortgages for the younger generation." Wang Yucheng is a real estate lawyer at the Beijing Jinsu law firm. He warned such mortgages were risky. It's understandable that many cities are trying to revive their housing market by reducing the monthly debt payment and enlisting more elderly people into the pool of home buyers. But the elderly have relatively poor repayment ability. On the one hand, it could affect their quality of life in old age as they continue carrying the mortgage debt mountain and work for the bank until the last moment of their lives, Wang said. On the other hand, the associated risks may be transferred to their children, increasing their financial pressure. For some home buyers, choosing this way to purchase a house is probably because of their lack of funds. But it's risky to do so at this time, Wang said. Chinese property market is in a structural downturn and the government is still working to curb speculation. Evergrande Group is China's largest property developers. It has been at the center of the country's property crisis. Evergrande owed over $300 billion in loans. Analysts at the UBS estimate that China's real estate slump will cost the nation's banking system as much as $212 billion in losses on loans, bonds, and other assets. Meanwhile, China's slowing economy is likely to be exacerbated by its shrinking population. China's population dropped by 850,000 last year, the first decline since 1961, the last year of China's Great Famine. China's birth rate contracted to its lowest rate on record with only around 6 births per 1,000 people, down from just over 7 births the year before. Allow me to conclude today's program with one of the most popular posts on Weibo on this topic. I might lose my job at age of 35, retire at age 65, and pay my mortgage at 80. What a life! Thank you for watching. Please leave a comment and subscribe to my channel. Just click the subscribe button right here. I'll see you again shortly. Until then, be well.